if you want to trade V75 consistently without being trapped, because we know this is not a real market. The meaning of synthetic means that something that is complex. A complex subject or substance is something that is imaginary in most cases. So if you want to trade these markets comfortably, because they have advantages, like they don't have fundamentals, they don't have, you can trade them over the weekend, they run 24/7, yeah? But they are man-made, right? So meaning that there are some disadvantages on our side, which are advantages on the broker side. So if you want to trade them consistently without being trapped in most of the things that most traders go through, you have to do what I'm going to do for you here, because I've been trading them for about 4 to 5 years, and at least I have some little experience that you may not have, right? So the last time we talked about V75, I gave you guys a pattern like this, and I told you guys that when the market comes back down here, you can execute your buying order. So the last time we talked about it, it was still up here, and we wanted it after this impulse here to come and retest this area here, and then continue up, or if it broke downwards, it will come back down to this false breakout area. You can watch the previous video, which I'm going to attach. So when it comes back to this area, then we can look for the buying opportunity, and our target would be this area here. Now we're going to add something to that. So we're just going to go back to our method of analyzing, right? Make sure you follow along. So as usual, when you're doing analysis, make sure you always start from the monthly time frame. When I go to the monthly time frame, what do I observe? Now, this is very key. I told you guys that the market communicated to us that it's no longer interested in continuing down, but you can see this, the market has been consolidating here for some time. And also you can see that the market is making lower lows, lower highs, lower lows, lower highs, lower lows. Now, this closure of price here, or this turning point here, is very important. Let me just clear it so that you can see properly. This turning point here is very important. We have today and tomorrow for the month to close together. So if the month closes above this area here, cleanly closes above, there are higher chances we could just have a retest into this area before the market starts trending upwards. Alternatively, if the market closes below this area here, there are high chances the market could still be in this saga, or even go a little bit lower. Be keen on that. It could either come back into this area, then close above there, or it can even go a little bit lower into these areas here, right? That is monthly. So what are we going to do? We're just going to mark this area which we're interested in here. Always start from the monthly time frame. If you can't see this turning point, let me just change the color to a visible one, which is nice. Let me put red. So if you cannot see it properly, make sure you go to the line chart, then you can mark the turning point like that, right? So let me just increase it down. I've marked. Yes, it's done that we have marked. Now we go back to the candlestick chart. Another turning point that led to that is this movement, this turning point that gave us the push upwards, this area here. So this is the point we're going to be trading in, this area here, right? Up and down. This is our resistance. This is our support. So if the market then close above this area, there are higher chances we could be coming back down into this area. But before we reach even down here, we have another turning point just up here, which I'm just going to mark for you, that you're going to be using, right? Remember, whatever you're marking in these bigger time frames are the things that are the levels that you're supposed to be using as your targets, and where you're supposed to be taking trades from. Do not take trades in areas that you've marked from smaller time frames, please, right? So I've marked 1, 2, 3. Those are 3 areas, right? So as long as the month closes below this area here, you're going to trade your first target up to here. When it breaks this area, it tests and comes back to this area. So these are the 3 levels I'm going to be working with. Now let's go down to the weekly time frame. What do we observe in the weekly time frame? So in the weekly time frame, we do observe that the market is still here, right, in this turning point of monthly. And what we see here, we see that the market has broken this turning point, and this turning point plus also this turning point, making this some sort of an impulse a bit, right? So if the market creates an impulse like this and has broken these turning points here, there is a possibility it may want to come and retest this point. You can see this is an improper retest here. You can see this is an improper retest. So there are higher chances the market may want to come and retest here properly, right? But it's not yet, it doesn't mean that since it has touched this monthly level that we have marked, we should start looking for sales. No, I'm going to show you what you should look out for before you look for the sell. Are we together? So weekly and monthly communicating the same thing. And if you recall also, I told you guys that this was an impulse here, right? This is an impulse. So after an impulse, as long as the 61 is not broken, the 61 is exactly at this red slab here, this down one here. I told you guys that impulse, correction, and we shall have another push up. So it was ranging here. Then finally we broke up and retested this point here. Together. So the market tested this point, but it's not a proper retest. So the higher chance that the market will come back. Now, weekly, monthly communicating the same thing. Let's go down to the daily time frame. Now, the daily time frame, what's the daily time frame telling us? If you want, you can put back the trend line that we worked with last time. We have this upper one here, right? You can have it here together. You can also put the down one in case you want. I'm not a very big fan of trend lines, but I'm just trying to improvise for every type of trader. So I'll just adjust this together. So these are the areas in which we're working with. Now, currently, we are above here. Now, if the market wants, it may want to close below this area here, right? But when the month starts, it may want to stretch to kick out people into this area before coming to retest this area. So you have to be very careful. And what is that going to make you be careful is the smaller time frames. And my favorite small time frame, by small time frame, I mean the entry time frames like H1 and H4. The minute 15, minute 30s are refining time frames, though most of you use them as entry time frames, which is not bad, as long as you've identified your level. So you see, we have this level, we have this level, we have this level, and also we have this trend line up, right, and this trend line down. So these are the levels that you have to work with. It doesn't matter the time frame you're going to use, but work within these limits. The reason why we do analysis from the bigger time frames is you have to get your limits straight. See how clean the chart is? We're not even struggling. Now, another confluence that you can add is this, right? This confluence here, where the market is currently struggling, this confluence here. I'll just turn it to blue so that it can be different from these other bigger time frame levels. You can see the market is holding from there. So if it breaks this area above on the retest, you know that you're targeting the trend line. So this is another confluence that you can add. Now, how do I know that I'm supposed to be taking a sell right now, or it's going to break above and continue? How do I know that I'm going to continue with the buy, or I'm going to be looking for a sell? Now let's go to the entry time frame, which is H4. Now, when I come to H4, observe this. The market is still making higher high, higher low, higher high, higher low, higher high, higher. There is no perfect higher highs and higher lows that you're going to see like this one here, right? Higher high, higher low, higher high, higher low, higher high, higher low, came and tested this area here. So currently the market is here. Until the market stops making these higher highs and higher lows, and then it breaks the last higher low, there is no, of course, the last higher low is equivalent to the higher high that the market was coming to retest. So it creates a new higher low. Now, as long as the market didn't break that, the market can easily still continue higher. And you don't want to be a victim of this. You're selling to sell in a bullish market. We want to sell when the market has told us, hey, I'm interested in going down after breaking this. Are we together? So you can clearly see the market is still bullish, even if our setups are telling us that, hey, we have hit resistance. But hitting resistance does not mean that you're supposed to be looking for sales. There are certain conditions that you're supposed to fulfill. And one of them, which is the most important, is the market should first change. Before even candlesticks, most of you think that bullish engulfing, morning star, evening star, haramis, and the rest are what you're looking out for. No, we look for two important things. One of them is that trending, the higher highs and higher lows, or lower highs and lower highs and lower lows, the second one is the momentum. We've spoken about momentum countless number of times. So make sure you use it to your advantage. I hope this makes sense, right? So if you trade V75, these are the parameters in which we are using. We have been trading it ever since it was still down here, around here. Even when it came back down here, we're still waiting for sales, but didn't capitalize, so we joined in the buy around here with the people that I'm working with privately. So hope this makes sense and utilize it. Have a great week ahead.